There is a belief that has kept more people out of the stock market than any financial crisis, any recession, or any economic disaster in history. That belief is this: you need a lot of money to start investing. And it is completely, provably false. A few months ago, someone told me they were waiting until they had $10,000 saved before they started investing. They had been waiting for 3 years. In those 3 years, if they had put just $100 a month into a basic index fund, they would have been sitting on nearly $4,000. And more importantly, they would have 3 years of investment experience, 3 years of compounding, and a habit that was already working for them. Instead, they had a savings account earning almost nothing and a plan that kept moving further into the future. If that sounds familiar, this video is going to change how you think about starting. In the next 10 minutes, I am going to show you exactly how to start investing with just $100, which account to open, precisely what to buy, and why starting today with $100 beats waiting until you have $10,000. No day trading, no crypto speculation, no get-rich-quick schemes. Just the straightforward, proven first step that anyone can take this weekend. This is wealth clarity. Let's get into it. Let's deal with the biggest mental block first, the feeling that $100 is too small to matter. Here is what the data actually says. $100 invested in an S&P 500 index fund today, plus just $100 added every single month grows to approximately $121,000 over 30 years at historical average returns. That same habit started just 5 years later produces approximately $82,000. The difference is not how much you invest. The difference is when you start. Time is the single most powerful variable in investing. Not the amount, not the timing of the market, not which specific fund you choose. Time. And here is the thing most people don't realize about starting small. The $100 is not really the point. The habit is the point. When you invest $100, you are not trying to get rich from that $100. You are building the mental and behavioral foundation that makes investing automatic, the same way brushing your teeth is automatic. You do not think about whether to brush your teeth. Eventually, you will not think about whether to invest either. But you have to start to get there. There is also a practical reality that most people don't know about. In 2026, every major brokerage in the United States offers fractional shares and zero account minimums. Fractional shares mean you can buy a piece of any stock or fund for as little as $1. You do not need to afford a full share. A full share of a Vanguard S&P 500 ETF costs around $400. Your $100 buys you 0.225 of that share. You own it. It grows with the market. It pays dividends. It compounds. The fraction does not matter. The ownership does. The barrier that kept ordinary people out of the market for decades is gone. The only thing keeping most beginners out now is the belief that the barrier still exists. Before I tell you where to put your $100, there is one question you need to answer honestly. Do you have an emergency fund? Not a big one. Not 6 months of expenses. Just enough to cover one unexpected bill without panicking. Even $500 sitting in a high-yield savings account changes your financial psychology completely, because when your car needs a repair or your phone breaks, you don't have to touch your investments to cover it. Here is why this matters for investing specifically. The number one reason beginner investors lose money is not bad stock picks. It is not market crashes. It is selling investments during a dip because they needed the cash for an emergency. When you sell during a dip, you lock in the loss permanently. If you had emergency savings, you would have left the investment alone, it would have recovered, and you would be fine. So if you genuinely have zero savings buffer, take your first $50 and open a high-yield savings account. As of spring 2026, the best high-yield savings accounts are paying 3% or more. Your money is not just sitting there, it is earning something while it waits. Then take the other 50 and start investing. If you already have some emergency savings, even a small amount, skip this entirely and put the full 100 into investing. You are already ahead of most people. Now, where does the money actually go? You have two choices, and the right one depends on one simple question. Do you want this money for retirement, or do you want access to it before retirement? If this is money you will not touch for 20 or 30 years, open a Roth IRA. A Roth IRA is a retirement account with a tax advantage that is genuinely extraordinary. You put in money that has already been taxed. It grows completely tax-free inside the account. And when you withdraw it in retirement, you pay zero tax on any of the growth. Zero. Decades of compound growth, and the government takes none of it. The 2026 contribution limit is $7,500 per year. With $100, you are well under that. You can open a Roth IRA at Fidelity, Charles Schwab, or Vanguard. All three have no account minimums, and all three are trusted, regulated brokerages. If you want flexibility, if there is any chance you might need this money before retirement age, open a standard taxable brokerage account instead. You can withdraw anytime with no penalties. You will pay capital gains tax on profits when you sell, but you have complete access to your money whenever you need it. For most beginners starting with $100, the Roth IRA is the better choice, because the tax-free growth over decades is one of the most powerful advantages available to ordinary investors, and most people never use it. You have opened your account. Your $100 is sitting there. What do you actually buy? One fund. That is the answer. One broad market index fund. Not 10 different stocks. Not a mix of complicated ETFs. One fund that owns a piece of every major company in the United States or the entire world. And then you leave it alone. Here are the 3 specific funds that financial experts consistently recommend for beginners in 2026. The first is the Fidelity Zero Total Market Index Fund, ticker FZROX. Expense ratio, 0%. Literally free to own. It tracks over 2,500 U.S. companies. Available only at Fidelity. For a beginner with $100, this is the lowest possible cost starting point. The second is the Vanguard S&P 500 ETF, ticker VOO. Expense ratio, 0.03%, 3 cents for every $100 invested per year. It tracks the 500 largest U.S. companies including Apple, Microsoft, Amazon, and Google. Available at any brokerage that supports fractional shares. The third is the Vanguard Total Stock Market ETF, ticker VTI. Expense ratio, 0.03%. Tracks the entire U.S. stock market, over 3,600 companies. Slightly broader than VOO and historically equivalent performance. Pick one of these 3. Buy it with your full $100 using fractional shares. Set up an automatic monthly contribution of whatever you can afford. Even $25 a month makes a difference over time. And then, this is the part most people fail at, do not check it every day. The market will go up. The market will go down. Both of those things are normal, expected, and temporary. The investors who build real wealth are not the ones who picked the best fund. They are the ones who bought a reasonable fund and left it alone long enough for compounding to do its work. So here is everything we covered today. The idea that you need thousands of dollars to start investing is a myth. In 2026, you can open a brokerage account with $0, buy fractional shares of an index fund for as little as $1, and start building real wealth with whatever you have right now. The 3 steps are simple. Step 1. If you have no emergency savings at all, put $50 into a high-yield savings account first. If you already have some savings buffer, skip this and invest the full amount. Step 2. Open either a Roth IRA for tax-free retirement growth or a taxable brokerage account if you want flexibility. Fidelity, Schwab, and Vanguard are all excellent and all free to open. Step 3. Buy one single broad market index fund. FZROX at Fidelity, VOO, or VTI. Set up automatic monthly contributions. Leave it alone. That is it. The entire beginner investing framework in 3 steps. The only mistake you can make from this point is waiting. Every month you wait is a month of compounding you cannot get back. $100 invested today is worth more than $1,000 invested 5 years from now. Because of time, not because of the amount. Start with what you have. Start today. If this helped you take that first step, subscribe to Wealth Clarity. We publish new videos every Wednesday and Saturday breaking down money concepts exactly like this. No jargon, no noise, just clarity. YouTube, We'll show you the perfect video to watch next right on your screen. I will see you there.